stop. I'll have to hop out and go back in again.
No problems. We'll come to George and come to you. Hi, everyone, and welcome to today's market analysis for Sunday the 3rd of July, 2022. It's great to have your company today. We have got Ainslie and George with us today. As you will have heard on the crossover, Ainslie having some technical issues. I don't know whether it's the internet, I don't know whether it's Zoom, but there's often a little technical glitch with Zoom. We've just come out of our breakout webinar, Learning to Trade breakouts with Ainslie, which many of you would have been in. Now, she has been out, she has come back in. I'll just see as she comes back in. She'll be on sound, I would think, in about 5 or 10 seconds. If she is, we'll stay with the original plan and go with oil first. And if she's not quite ready, we will go with George first. Ainslie, where are you up to? Going to give her another 5 seconds. Ainslie, you around?
I'm good.
Ainslie, are you ready to go with oil? Or do you want me to go with George first?
I can go gold.
Okay.
Gold.
Okay. I'll do a bit of a run into it, okay, so we can have a full recording. Hey, everyone. First of all, welcome to everyone. Nice to see so many in the Zoom room. It's good to have your company on a Sunday afternoon as ever, and a busy Sunday afternoon for Access 12 staff. We have got meetings coming after this. We're going to get into this market with one of those ones that we've been waiting for a little while, seasonality coming into play here, and we are looking for a move on gold not too far away, I would think. Ainslie, what's your read? Is this move in gold likely to turn up?
Look, at the moment, it's a really hard one to call because let's have a, going to go straight over to, oopsies. All right, hang on, which one? Let me just stop sharing. Sorry, I just grab the screen, grab the right one, and we'll go from there. Okay, so we've got gold analysis for this week. We saw gold drift down. Okay, we've got a lot of there was a lot of erratic spurts up and down, sideways, but overall it drifted down. But Friday we saw this major move back up again, and we're closed at 1809.22. So Friday's action was the only thing that we saw that was of any interest. Where it unfortunately just reversed exactly what it was doing. That was just off the back of the US dollar taking a move lower. It was very interesting after seeing the US dollar push up, and that was on the higher time frames. It's clearly visible. There is now a pause in the downtrend. Okay, so even though we had that move up on the higher time frames on the weekly and the monthly, we're still just going nowhere fast. So what does that look like on the charts? So this is on the 4-hourly, and it was erratic. You can see, Paul, it was just all over the place. It up, it was down, and then it finally drifted down. And then we had this major reversal with this low test bar, and it came back up again. And when you look at it on a daily chart, bang, you're straight back into that box of consolidation. You're back into an area, back into the range. However, where it's going to go to from there. I mean, I love a low test bar, but I love to see another bar to bring it back up. Is it going to go back to the top of the consolidation box, or is it going to come back down and drift a little bit lower? That's really hard. But if we're going to look forward, we need to take a few more things into consideration. You're looking at now on a weekly chart. It looks dead. You know, gold just looks dead. One of the things we like about dead and consolidation and ranges is it's going to break at some point, isn't it? It's going to go to the top side or it's going to go to the bottom side. Seasonality should be having a little bit of a push behind it, but at the moment, one of the big overlying factor on that one for me, Paul, is the Fed. Now, there's been a lot of lurking sentiment that the Fed Reserve has left their action plan to address inflation just a bit too late. It's not, where that has the impact there is that it's going to be aggressive with hiking those interest rates. Those interest rates go up, so do the bond yields. Bond yields are really affecting there's an inverse relation. So real bond yields, as they're going up and people taking money out of the market, is being a lot more attractive. As attractive as 3, 4, 5% can be, it's still impacting where gold is going. And I know we've got that seasonality factor going on, but the fundamentals at the moment is really, really, really strong. So that's one of the reasons I think we're still in this horrible sideways movement with no direction. But hey, I like a good seasonal move, and it's not happening. I've missed out on a couple of seasonal moves just lately, and it's just not been a lot of fun. So just to give you an idea of what that is looking like at the moment, there's your 10-year real bond rate, and there's gold. It's just ugly, isn't it? It's just, oh, never mind. Anyway, that's what we've got. That's what we're dealing with, and we've got to deal with what we've got before we can make a move. The week beginning 4th of July, we have Monday, the markets are closed for American Independence Day. The big one this week will be obviously the non-farm payrolls on Friday. But at the moment, I don't see any major events pushing gold higher. I'm looking for them. Trust me, I'm looking for them. But I'm expecting more consolidation, and possibly if there is more talk and more Fed sentiment that they're going to be aggressive because they've left their run a bit late, we're going to see those yields go up a bit more, which is going to put a downward pressure, unfortunately, on gold. That's my take on it at the moment. Not you. You're muted, Paul.
Fascinating what we look at, Ainslie, isn't it? We've got 10-year bond yields at rates which people like you and me would still historically look at as being ridiculously low, and the whole generation behind us have never seen them this high. It's quite a different world we're living in now than the one we lived in perhaps 20 or 30 years ago, and we might be coming back to something like we saw in our day. Thanks for the analysis. Really interesting. I think that 10-year bond yield versus gold price is a really interesting thing to watch as the gold traders keep an eye on that as we go forward. Rightio, we'll come back to you on all in a few minutes, Ainslie, but first we're going to talk to George. Got anyone live today, George, perhaps coming to the staff meeting afterwards. What time is it in Johannesburg?
It's just gone past 11 o'clock, 11 a.m., so 6 past 11.
Oh, it's not too bad at all, George. Not too bad at all. Mate, so what do you got for us today?
Yeah, let me just share my screen quickly. So it's quite fascinating. Last week, I pointed out that this bear trend that we had across all the markets is likely to have continuation. I said that was the first leg, and we're expecting a second leg. Now, right now I've got the Euro Stock 50 index open. So what happened throughout this past week? So this was the candle that was on when I spoke about continued bear price action, continuation of the crash. And this is what happened last week. Now, from a price action perspective, whenever you see a breakout, in this case, it's a bear breakout, first thing we look for is a possible continuation, higher probability of possible continuation after a pullback. So that was a pullback. So first leg, pullback, second leg is down here. And that's a magnet that's pulling the market down. Now, this yellow line just indicates for me a cluster of confluence factors that are all pulling the market down. So there's a first leg, second leg. There's a trading range that was created here, including this whole week we're in a trading range. Now, whenever you see a trading range, just like Ainslie said, there is likely to be a breakout. The market's not going to continue all the way in that direction. But if it does break out to the downside, the bears want to get to a measured move. The measured move of that trading range takes us again into that particular cluster that I think is going to pull the market down. So yes, we've gone sideways, but the probabilities still favor the bears. That's where they want to go. So I'm expecting a breakout somewhere down here. How long it will take, I don't know what the catalyst, I don't know from a fundamental perspective, but I'm expecting a breakout of this trading range. And if that does okay, the measured move is down here. Now, probabilities, there's always this other side of the equation. Even if the bulls only have a 10% chance of breaking out, we're still in this bear trend here. We're in a bear trend. So even if the bulls break out above the trading range, look where the measured move will take us, right to the test of that trading range. So it doesn't, any bull breakout will not change the fact that we're in a bear market. And if we get up here, the bears who would have stepped out of here, stepped out of the market. Now, if you think about it, if the bull start to break out, you're a bear, what do? You're not going to sell here. You're going to just stand back and wait to get to this level of test, measured move of the trading range, bear trend line, and sell again at a better price, hoping to get down here. So still in a bear trend. Now, the good thing about this, I'm looking at the daily chart. These patterns, the markets are fractal. So whatever you see here will repeat itself. So what are you going to do on your charts is, especially now we're into the second half of the year, you got to mark, the low of the year, low of 2022. You got to mark whatever the high is. Midpoints of the year now begin to play a dominant part. You could flip through and do the same thing. German 30 or DAX 40, whatever, on the chart when your broker, really interesting. First leg, pull back, that's where the market wants to go. So now we're in a channel, spike and channel, pretty common whenever you have a trend. So even if you get a pullback, what I'm expecting to see if I get a test up here. Now, how does it affect my 5 minutes chart trading? When I go into the market tomorrow, for example, although we're in a bear trend, because I'm on a lower time frame, I'm expecting the bulls to try and push the market off this low test candle, double bottom. So I can look for longs, but I'm looking for longs knowing that there's possible reversal coming in. And you can do that with all of the charts. Same thing here on the UK 100 trading range. There is the cluster of support that's going to pull the market down, measure and move of that. Even if you get a bit more of the bulls coming in, it's just a trading range being created. S&P 500, a very distinct bear channel. That we're in. There is where the bears could come in. Test of that trend line, double top, but the market still wants to get down here. Will it get down here or 10 here? There's still more selling to come. So if we think that the crash is over, it is not. Clear, distinct channel, NASDAQ 100, Nikkei 225 is in a trading range. But if you ever look at it, if we come out of here again, there is a measured move to get to the bottom of the trading range. So this low test candle, if the bulls come into the market, they have to get above here. But if they get to the top here, bears come in. If we get to the bottom here, we'll get the bulls coming. Finally, Aussie 200, same kind of thing. I mean, if you just look at the chart, what you see, big bear breakout. And bears, as far as bears are concerned, a bit of a pullback when I get to that level. So, Paul, this is what I'm seeing at a higher time frame, but the same patterns repeat themselves on a lower time frame.
Cheers, George. Thank you very much for that. Much appreciated. Certainly going to bring some clarity to some people on these markets for us. Rightio, so thank you very much for that, George. And next up, we've got Ainslie coming back to do oil. Interesting chart, Ainslie, for mine, that oil chart. Interesting to have a look at. What do you think it's going to do for us this week?
I'm just going to grab that screen again. Screen 2. Look at it. Very, very disappointing. This is, we were looking for a breakout. We had can I bring that up here? There we go. So, oops, that's not what I want. I want that. And I've just moved the chart, didn't I? Hang on, let me move that back. Sorry.
There you go.
Yeah, good. I was trying to move things around, but I keep forgetting I've got to stop screen and reshare it. So what we've got here is we were looking for a move north, a long move on oil. At the end of last week, we had an ascending triangle, and it came down, retested, had a bit of a push down, and then off it went. The thing with oil this week, it has been all over the shop, and it opened here and closed there. So we've been on this roller coaster ride and just opened where we closed where we opened at the beginning of the week. What was happening here was we had a bit more of a bullish sentiment happening, and there was an OPEC meeting, and the OPEC meeting on Thursday really, as you can see, failed to impress anybody. And we've had a pull off coming down here. We also had the energy. One of the things that pushed it up was the energy Information Administration, the EIA. It was unable to report the previous week, as you could see here, due to, can you believe it, they had a blackout. They had no electricity. So the EIA was unable to present their report on energy because they had no electricity. So market fell. But as it came towards the end of the week, there was the whole China's coming back online again. The supply is going to be okay. They seem to be OPEC over here on Thursday were quite keen to say that they were not going to increase or decrease. Now, I think they're going to refine that by the next meeting, because what you also had there were some special reserves being released as well. So got a little bit more flooding the market. You've got OPEC saying we're good, we're okay. But here we've had a nice sharp reversal, and you've seen that really clearly again on the daily chart. What we've got there is, we've got some supply disruptions. We've got strikes in France, we've got strikes in Norway, we've got a few other bits and pieces that are just coming into the mix now. Very disgruntled little players going on. And that's all overlying with the whole Russia still with a bit of a stranglehold and the Ukraine crisis going on. So the fact that we've gone all the way around the circus and ended up exactly where we opened would seem to indicate there's some other things that need to play out here in oil before we can see a move either to the north or to the south side here. I'd like to think that, given how much it costs to fill up at the moment, fill up your car if you don't have an electric vehicle, I'd like to see prices come down, but I just don't see them coming down at the moment, Paul.
Yeah, I'm with you, Ainsley. There's a little trend line in there that's hanging on, and as long as it hangs on, I tend to be with you. I think we're far from done for the year, to be honest, on oil. But we'll have to wait and see. It is an interesting chart. Look, they are both gold and oil right now. They are at interesting places, and I like what you say. A little seasonal push in gold likely, but then 10-year bond rates causing us some issues with that. Could well just sit in that range for a bit longer. And oil again. I'm a bit of an oil bull, and you've got the trend line holding, but you've still got a lower high on the big picture stuff as well. They're going to be interesting, and oil in particular has given us really good clarity, and it's just not quite as clear right now, right?
It's not. When you start where you opened, like almost to the dollar, it's not a good thing. But as you said, lower high, and this is where it's important with these commodities that can flick around so much. Looking at those higher timeframes is really, really important. Looking at the daily, looking at the weekly, because things can happen so quickly with oil in particular. You've got suppliers going on strike, and that's a restriction on the supply side. It's not as a restriction on the demand side. There was talk of China coming out of the severe lockdown that they're in, and that is happening slowly, but seriously? So we've got a few things there, and we've got to remember a seasonal bias is exactly that. It's seasonal. It's not an indicator. You're not ready to pull the trigger. It's just something that's happened previously. It does not mean it's going to happen now. So just
that oil chart on the weekly chart's interesting, isn't it, Ainslie? Again, you did right. You have a look at that and you just go, boy, if that had closed a bit higher, you'd be all over the bill on this, but it just didn't, and it just makes you wonder about it, right?
Yep. What else is coming? Like I said, what can they drop on us next week? It's been interesting, and you can see the lights were out at the EIA, and all of a sudden the market takes a tumble. I mean, no electricity at the energy information and like the big energy.
You'd kind of think they'd have their own little generator tucked away in the background, wouldn't you? You'd think they'd have some kind of plan B for this kind of stuff, wouldn't you? Because it's not a great look. I'm not sure it should cause energy crashes, but it's not a great look, right?
No, it's the basic lack of confidence. It's just like, you're kidding, what else is coming? And the energy, and it's just like, yeah, you're right. You'd think they'd have a flashlight and they could, Morse code out the report, but no, they didn't have that. They had no generator. They had nothing. They had crickets. That's all they had, and it's something as simple as that. Just makes it just turn turtle and reverse hard too. They're not small moves.
They are not small moves, Ainslie, and we will watch with some interest this week, and hopefully what's coming for us is something a little bit more settled. I'm just scrolling back. I'm trying to remember who we got in tomorrow. Next week, Ainslie, to remind everybody, it'll be Alexis with Ash on Data and Lloyd next Sunday. To those that joined us today, and it's great to have the room as full as it is, thank you very much. To Ainslie and George, thank you very much for coming in and sharing your considerable knowledge. We'll be back next week with Sunday Market Update, where we'll have with us Lloyd on currency strength, Alexis on fundamentals, and we will have Ash on data. Until then, guys, remember, stay calm and make good decisions if you do it. It'll all work out. Cheers, everyone.
Thanks.
Thank you very
Bye.
much. Thanks.